Things that could really hurt stocks and potentially help as well on the hurt side. Obviously, it's going to be any kind of impact that tariffs may have on earnings, right? And it's going to be down to earnings to drive this market higher, if anything, because it's not going to come from multiple expansion, not at these valuations. But the problem there is, I mean, that's been happening literally all over the place, right? I've seen from potentially a 2% hit to a 10% hit on earnings. I mean, this is almost impossible to model.
Yeah, I mean, the range is so wide because there's so many unanswered questions with regards to tariff policy. I mean, we have maybe one unanswered question with the China tariffs going into effect overnight. But even after that, it's until February 10th that you have the retaliatory tariffs put on by China for their imported goods. So who knows what happens, from now until then. But even with Canada and Mexico, it's not a cancellation of the tariff announcement. It's just a delay. So if anything, I think that the thickness now of this fog from a trade policy standpoint really at some point, if it persists, and we know this from 2018 to 2019, if you're going to use that as something of a playbook, I don't think it's a perfect one, but if you're going to use that as a little bit of a playbook from a trade war perspective, there was definitely a slowing in capex, and there was a hit to business expectations around things like capex and eventually hiring patterns because of how uncertain that trade war was. Now you're dealing with it on multiple fronts, not just with a huge country like China, but with two key strategic partners like Canada and Mexico, which, if you combine them together, have become more dominant in terms of their exports to the U.S. than China. So there's many reasons why that range that you just cited is so wide, is because nobody really knows what the ultimate impact is going to be. So I think that for this earnings season that we're in, and you're actually starting to see some companies already talk about this, whether they're domestic based or actually international selling into the U.S., talking about the impacts from this and how this cloud of uncertainty is really going to weigh on either spending positions or spending expectations or positioning around what price hikes might have to be.
Yeah. Guidance sounds like it's not just going to be murky. It's going to be more like, hey, listen, your guess is as good as mine. But look, let's move on and talk about the parts that could help the market and stocks. And let's leave aside deregulation, spending cuts, getting the fiscal house in order, and focus on tax cuts, right? That's easier to understand a little bit more and will probably have a much more direct impact as well on companies and their earnings. How do we model that when it is literally also going to come down to politics?
Well, our head Washington strategist, Mike Townsend, is not as, I would say, bullish on the House being able to get things done just because of the slim and basically no majority that the Republicans have when you think about those who are going to probably get confirmed and move from their seat in the House over to the Trump administration. So you're talking about an incredibly slim margin, and even within the party, not a lot of agreement as to where to go, from a budget deficit perspective. So with tax cuts, even if you just get the extension of the 2017 Tax Cuts and Jobs Act, that's really just keeping the status quo. That's not, further stimulative to the U.S. economy. From there, if you got increased tax cuts, then it probably becomes a little bit more stimulative. But even there, you have a little bit of a policy mismatch and a goal mismatch from the standpoint of the administration, because anything that we do, from a fiscal standpoint that is stimulative, in theory, all else equals, tends to boost spending, both on the business side and on the consumer side, which has an import bias to it because we're a net importer in the U.S., which is going to widen out the trade deficit, which is exactly counter to what the White House is trying to do in terms of enacting tariffs to bring in the trade deficit. So there's a little bit of a vicious circle, at play. And I think those kinds of uncertainties are, again, to bring this back to the business operating environment, because I think that's really what matters here, especially from a labor market standpoint. Yeah. That's what makes this really tough. So you could talk about tax policy being potentially stimulative, but at the same point, at the same time, with tariffs kind of being this massive overhang where they're being billed as a revenue generator, but if they're not being put on, then you don't get that revenue for the offsetting tax cut, extension. You can see how that becomes a little bit of a vicious circle.